David Kudla, founder, CEO, chief investment strategist at Mainstay Capital Management, is with me. This, as the S&P is not too far off from that 6284 level, which was the high. We're getting closer and closer. The NASDAQ hit a record today. Some of your thoughts on what's going on here, and does it continue?
Hi, Nicole. I think it does continue. When we look at the setup for the second half of the year or third quarter of the year even, we have, you spoke about earnings just in the last segment. We're looking at consensus estimates of about 5% earnings growth for the second quarter. And a lot of that, that's guidance that came about because of tariffs, right? Because of the impact of tariffs, which we've seen that become a more diminished impact than what we once thought, certainly at the beginning of April, right, that set off the market correction. So I think we're set up for some beats, some good beats on earnings in the reporting season. We're looking at, will the Fed cut in July, September? They're going to cut in the second half of the year. And we just had this bill passed, which will have a fiscal stimulus impact that will buoy stocks as well. So we're looking for a continued advance, and we're constructive on stocks going into the third quarter and second half of the year.
So the second half is setting up nicely, as you noted here, and so you expect more highs. Do you expect high and then another high and then another high? You think we'll be sort of, can we clock in 5 or 10 highs between now and the end of the year?
Oh, certainly. Certainly. I think what we have to realize is, we're at a PE of 22. Valuation is not what we use to make a call on direction of the market, but we are richly valued. We could get a catalyst, maybe if earnings season does go as well as we think. If tariffs, we see a turn on tariffs. We've seen a lot of volatility created by tariff announcements, then they're diminished later. We could see a sell-off of 5 or 7% here in the third quarter even. But by the end of the year, we're looking, particularly for growth stocks, the AI trade, all that, it suffered in the first quarter of the year to continue to advance. And yeah, we could easily see 5 to 10 new highs for the NASDAQ and S&P 500 through the end of the year.
So at this point now, we're waiting on earnings season, which you say could be a catalyst, some clarity on the tariffs. We'll finally get some real tariff situation set. And what kind of investments should people make? I mean, I guess they're probably going to look out 12 to 18 months. What would you be buying to make money on these new highs? What are some of the themes?
Yeah, and this is what we like about this year. At Mainstay Capital Management, we're tactical asset allocators. So we're looking for opportunity outside the indexes of where we can enhance return and mitigate risk. And this is a year where you can do that. We've been overweight foreign stocks since the beginning of the year, particularly Europe, which had a good second quarter, a great first half of the year. Overseas stocks on average outperformed the S&P 500 in the first half of the year by 1,200 basis points or 12%. And we think we continue to see that in the second year with the advance moving from developed markets to being even stronger in emerging markets. So finally, after all these years, we have international exposure that's not only giving us diversification, but enhancing our total return of the portfolio. And also gold. If we look at the metals, gold, silver, palladium, copper now, with this tariff announcement, the metals are doing quite well. We think that gold is in a generational move. We've had a consolidation here recently, but we think that's just a consolidation before gold moves higher. So just looking at that, domestic, international stocks, and metals, we get a broadly diversified portfolio that has very good returns year to date. We think we'll have very good returns for 2025.
Yeah, and I'll ask you about the earnings expectations here for the quarter because, for example, the Federal Open Market Committee, based on their prior view, said GDP will be higher than what their prior view was. That seems like good news. They also said inflation will likely be lower, I'm paraphrasing, lower than what their prior view was. Also good news. With earnings expectations, could they be higher than some of the prior estimates?
I think so. I think they could be higher for a couple of reasons. Earnings coming in better than guidance earlier in the quarter for second quarter earnings that was based on these really draconian measures in terms of tariffs. That April announcement was a shock to the system, and we've lightened up since then. The deals that have been done and the deals that will continue to be done on trade policy and tariffs. Also, if we look at with the tariffs diminishing, that's going to be, that was a concern for GDP. Certainly impacted first quarter GDP. We're looking for about 2.5% GDP growth in the second quarter, and in the second half of the year, definitely positive. These concerns about recessions, and we've said for the last 3 years, it's the recession that's always 6 months away, and we're still hearing some of that. But we think we're going to have a good year for overall growth, for the economy and for stocks.
There are some members of the Federal Open Market Committee who disagree with Waller and Michelle Bowman, and actually think that the appropriate path is, in fact, to probably just keep rates steady for the rest of the year. Could that be detrimental to your forecast of new highs?
It could be, right? It depends. Why do we get rate cuts? Are we getting rate cuts because the economy is contracting, is slowing, or is it rate cuts because of inflation? Or what we think is we probably won't get as many rate cuts in the second half as some expect. And the Fed governors and presidents that are we believe that are coming out very avid about rate cuts. That might be some auditioning for the position of Fed chair next May when Powell's term is up, because President Trump has made clear what he wants to see the direction of rates is to be cut dramatically from where it is today. So there might be some politics involved in there, and it'll depend. Powell said it publicly. Hey, President Trump, it's your move. It depends on what you do with tariffs will determine what we do with monetary policy. So we got to see what the ultimate tariff landscape looks like. From that, we'll be able to drive where monetary policy will go, and the markets and economy for that matter.
Right, but definitely overweight. You have the foreign investments, Europe, you said you've liked that, you still like that, gold and silver and palladium, you still liked all of that. All right, David Kudlow, great to see you, founder, CEO, Chief Investment Strategist, Mainstay Capital Management. Thank you for joining us on the show.